Welcome to Capitalize Your Finances, the podcast that's your ultimate guide to mastering personal finances and unlocking the secrets of entrepreneurship. Each week, we dive into the world of personal finance and business development and have fascinating conversations with industry experts, seasoned entrepreneurs, and thought leaders who share their insights, strategies, and stories to help you get ahead in life. Whether you're a seasoned entrepreneur looking to scale your business or someone just starting out on your financial path, this podcast is your go-to resource for inspiration and actionable insights.
Welcome back to Capitalize Your Finances. As always, I'm your host, Christopher A. Paniotu, certified financial planning professional, the Cap and Capitalize. And before we get into today's episode, which is Mastering Entrepreneurial Finances, Strategies for Financial Management Success, your free tip of the week. Are you ready? Drum roll. Don't do drum rolls. Drum rolls are stupid. When it comes to growing your net worth, quickly discover your best core strategy and focus on that relentlessly. Eventually, you will surround yourself with what we call satellite strategies. And this will only be appropriate when you recognize that there is an opportunity cost to venturing into other areas of investing. So for now, keep it lean and mean, and your net worth will thank you. So just to talk about that really briefly, and then we're getting into the show. A lot of people ask, frankly, the wrong questions when it comes to investing, and you have been fooled into thinking, oh, I need to diversify all over the place. That's not totally true. It's wise to know that you probably shouldn't have all of your eggs in one basket, but look at all of the most successful people in the world, financially speaking. Jeff Bezos built his money on Amazon. You've got Elon Musk, Tesla. You've got Bill Gates, Microsoft. You've got a lot of these people in the business side of things. There was Sam, and I'm blanking on his name. I think it was Sam Zellin, who just passed away. It was all real estate. That was his thing. Now, I'm not saying that stocks are the only way, or real estate is the only way, or a privately owned business is the only way. But what I'm telling you is, once you understand what works for you, focus on that and don't go anywhere else. You look at a lot of these investors and their net worth is concentrated in maybe just one stock. And we're talking 70, 80% of their whole net worth. And we're also talking billions of dollars. So don't stray away from that, okay? I know I went a little elongated, but that's really valuable for the free tip. So with that, let's get into mastering entrepreneurial finances, and let's chat about strategies for financial management success. And what do I mean by that? What I mean by that is this is going to be not as much of an investing in a personal finance. This is more of an entrepreneurial and overall business success podcast. So how can you capitalize on creating the most successful business possible? So the first tip that I'm going to give you is you want to fill your calendar with as many meetings as possible, as fast as possible. So this goes out to the entrepreneurs out there that are literally just starting out and you're figuring out, where do I begin? When you're starting out, you have all of the time in the world. And let's face it, if you've just started your business, you have no revenue, no hope. You have nothing other than all the time in the world. And that is a huge benefit versus all of your competitors out there who are now bogged down on working so much on their business, they can't work they're working in their business, they're not able to work on the business, okay? And so, because you don't have the revenue in the business, but you have all this time, the faster you break even and start earning a living, obviously the better your business is going to be. But the only way that you do that is loading up your calendars with as many meetings as possible. Just to give myself a little shout out here, later this year when Capitalize Your Sales comes out, I show exactly what I did when I started out of my apartment almost a decade ago. But it's not about me, it's about you. This is really common sense when you think about it. I mean, the more you fill up your calendar, the greater chance you have at succeeding in getting a new client. Now, eventually, you're going to have to shift your mindset to working on your business. But for now, okay, you're going to be all in on your business. And you can't afford to sweat the small stuff. Don't make the mistake I did. I was getting into this nitty-gritty detail of my business when I first started, and that lasted about 3 days, because when you're broke as hell, you quickly realize, okay, I just need to go and make a living. And then you can get dialed into the details. So in the world of entrepreneurialism, everything is a big deal. So, the small stuff will eventually become a big deal, but you can put it off to the side. One thing I want you to be, I want it to be crystal clear in your head before we move on to the second step. Experience has nothing to do with the number of years that you have lived. It has everything to do with the number of meetings you have. So I learned this very, very quickly because, there have been like the average advisor or planner in our industry, I think is like 61 or 62. I just turned 33 as of this recording. And I can tell you right now, a lot of these planners, especially in our industry, once you build up your business, you're kind of good. Like you can kind of just coast, okay? And many of them do. But let's face it, when you're coasting, you lose your experience. And so I can tell you right now, I probably have double the experience of a lot of the competitors out there because of the number of meetings that I've had. And it's no different than what you are trying to do, whether you want to be a social media manager, a real estate agent, a coffee shop. Like, it doesn't matter. The more meetings you have, the more experienced you will become. So the second tip I want to talk about is learn as much as possible about sales and how humans interact. So this is kind of an indirect to do, but it's extremely valuable. So think about it for a second. What don't you have that these big businesses have that are your competitors? You don't have brand recognition when you first start out. You don't have money. You don't have the depth of employees. You don't have experience, and you don't have a client base. Now, that sounds pretty bad, and it kind of is. However, I would argue it's quite the opposite, because I'm going to tell you all of those things that I listed. That's the game that you don't want to play against your competition, because you're going to lose, okay? They've got the brand. They've got the money. They've got the employees. They've got the experience. They've got the client base. What can you provide that these businesses and corporations can't? Think about that for a second. Maybe even pause the show if you need to. Now, for those of you that didn't pause and you want me to just keep going because you're super impatient, the easy win is you can connect with each and every person you sit across from deeper than anyone. Now, why am I saying this? Okay. It's a simple reason. It's all controllable, okay? You can't control everything that you're going to lose at, like I mentioned earlier. You can control more than anyone how quickly you can connect with someone. And it doesn't matter if it's going to be a client, if it's a business partner, if it's what we call a center of influence who could refer you a ton of business, but it maybe isn't directly in your line of work. It does not matter. The quicker you connect on a deep level, you're going to blow everyone out of the water as far as competition. And actually, even your own friends and family, okay? So when you do that, not only are you going to start to see your business compound, but you're also going to see your bank account compound, because the more you connect with people, that leads to sales. And then when that leads to sales, you actually make money. Okay, which is great. That's kind of the point of running a business. So with that being said, we're going to take a quick commercial break. I am going to take a quick sip of water. And then when we get back, I'm going to close out with the next 2 tips of mastering entrepreneurial finances, strategies for financial management success. Don't go away.
Capitalizers, this episode is sponsored by the best-selling book, Capitalize Your Finances, the how-to framework that takes you from compoundingly clueless to monetarily magnificent. Regardless of where you're at in your financial life, whether you're just beginning to express interest and commitment to your personal finances, at the pinnacle of your career, winding down into retirement, or thinking about your legacy for future generations, this book walks you through every step of the way so you can succeed on your terms and with your own values and passions guiding you. After reading this book, you will officially have Christopher A. Panayotou, the Cap in Capitalize, in your back pocket, guiding you in detail through every step of the way so that you can take charge of your finances, not the other way around. Head on over to Amazon.com today and start capitalizing your finances to the fullest with this incredible book, Capitalize Your Finances, the how-to financial framework that takes you from compoundingly clueless to monetarily magnificent. And now, back to the episode.
All right. Welcome back from the commercial break. Let's get right into it because I am eager to get through these next two because, frankly, they're arguably more important than the two I mentioned earlier. So the third tip that we're going to go over with mastering entrepreneurial finances, strategies for financial management success. Once you start profiting from your business, win the easy wins before you complicate your life. Now, I want to spoil something for you. There are a ton of easy wins out there, okay? Not only are they easy, but they're often the best easy return you will get on your money, okay? So this gets maybe into planning a little bit. So let's say that your business is absolutely crushing it, okay? And you've got the first world problem of the IRS breathing down your neck aggressively in the form of taxes that will be owed. And you've got people that you care about and you want to reward them at your business, okay? So your employees, they may want a retirement plan or a health savings plan and you want to get a tax deduction, okay? That's where you start the retirement plan. You get a write-off for the expenses of starting a retirement plan. Plus, your employees are happy that you're providing a retirement plan. Plus, if and when you match their contributions, you get a further deduction. And if you max out your 401k as an employee for your company, you get to avoid the tax bracket in taxes you don't have to pay, which is the greatest return that you can guarantee, okay? And yes, my compliance people, you actually can guarantee that because you're not paying those taxes, okay? Compliance in our industry doesn't really like the G word, so I always like to have a preface before and after I use it. So that's easy. And it's the same thing when you use a HSA through health insurance, okay? Now, let's take it up a notch. What about a more sophisticated business owner? Okay, I've started my 401k. I'm maxing that out. I've got an HSA plan. I'm maxing that out. What else is there? What if you think about reinvesting into your business? So this could be an amazing idea if done prudently, and I want to go through an example with you. Let's say that you put $50,000 into marketing your business, and it takes 3 years to get it all back, okay? Let's also say that your business is making a solid amount of money every year, which also means that you're in, let's say, the 40% tax bracket when it's all said and done, which is not great for the purpose of taxes. Well, not only are you putting that money back into your business, again, you're reinvesting it, with marketing, that $50,000, you get a deduction because you get to write it off all in 1 year at 40%. So you're earning 40% in the taxes you're not paying today, but you're also earning 33% on your money when you get it all back in 3 years, which is a dang good strategy, okay? There is nothing out there that can guarantee you a 40% deduction on taxes avoided and a 33% rate of return over that 3 years. Now, is it guaranteed? No, but if you're running a business, and you and I know this, you know your business like the back of your hand. And so, no, it's not guaranteed, but if you know it, you got a pretty good understanding of that range of what you're going to earn on when that money comes back to you, okay? And so, you know, when you're doing that, and if you're able to earn that type of money, forget a distribution. Keep doing that until your business starts to kind of peak out at that return on investment. And that's when you're going to want to start taking distributions and reinvesting it into something else, okay? And, a lot of people, business owners will ask, okay, well, what's that number that we should start looking to, take distributions instead of reinvesting? I would say if you're earning less than 12%, for sure 10%, then you should probably look into taking distributions and going elsewhere with it, okay? And then the last one I want to briefly touch on is know the value of your business so that when it comes to retirement or transition, being an entrepreneur, you know if you can afford to do so. So it astounds me that so many business owners have not a clue what their business is worth. And I'm not talking like down to the penny, okay? That gets a little weird, but not the faintest idea. And I'll tell you, if you're within 10 years of retirement or transitioning out of your business, it is 100% worth getting a valuation on your business regularly. Now, if you don't know where to go with that, I got to give a shout out to my friend Lori Barkman, the Business Transition Sherpa. The Business Transition Handbook is one of my favorite books out there, not only just in business, but period, when it comes to understanding how to value your business. So you're going to want to pick that one up. But once you know the value of your business, then you can work backwards regarding if you can afford to retire, or if you're moving into another business, if your current business can act as a solid bridge until your next chapter gets off the ground successfully. Or maybe you fund the new business with some of your current sale money that your business is that you have right now. You invest the rest to live off of, and that can be really, really valuable. A lot of these entrepreneurs, people assume that they're taking this immense amount of risk. In your first business, you are, okay? I mean, there's no ifs, ands, or buts about it. But a lot of these entrepreneurs, it's kind of interesting because they're not taking a lot of risk. In fact, they're very calculated with what they are doing. And there's a number of different stories with that. I'm a firm believer, if you're going to sell your business and transition into another business, and you're using some of that money from the first business that you sold to basically, bridge you to your next venture, you could argue that you're really not taking any risk. So you can take a lot of risk in starting that new business, if that makes sense. So those are the 4 tips that I wanted to go over of mastering entrepreneurial finances, strategies for financial management success. I know this was a different episode, and just because you're not an entrepreneur, it's good to think of how a business owner operates from a mindfulness perspective. And you start to value things as an owner, not just as a business, but like an owner of your life. Okay. And that gets to be really, really valuable. So I hope you enjoyed this episode. I cannot wait to see you next week. And as always, until next time, keep capitalizing. If you have questions about today's episode or any personal finance questions, please reach out to me at Cap and Capitalize on Instagram, Chris@capitalizeyourfinances.com, or via our website, capitalizepodcast.com. If you want more Capitalize Your Finances content, head on over to capitalizepodcast.com and check out our blog, free resources, book, and online course. As always, I'm your host, Chris Paniotu, certified financial planning professional, the Cap and Capitalize. And until next time, keep capitalizing.
The information provided should not be considered specific tax, legal, or investment advice and is not specific to any individual's personal circumstances. Different types of investments and/or investment strategies involve varying levels of risk, and there can be no assurance that any specific investment or investment strategy will be profitable for a client's or prospective client's portfolio. Thus, investments may result in a loss of principal. These materials are provided for general information and educational purposes based upon publicly available information from sources believed to be reliable. We cannot assure the accuracy or completeness of these materials. The information in these materials may change at any time and without notice. Diversification strategies do not ensure a profit and cannot protect against losses in a declining market. Examples cited are hypothetical, are for illustrative purposes only, are not guaranteed, and subject to potential federal and state law amendments. There is no guarantee that you will achieve the results discussed or illustrated. 401k benefits may be subject to change at your employer's, the governing pensions, or benefit organization's discretion. LPL Financial Insurance License Number 0518721. LPLIA Insurance License Number 0B91442. Christopher A. Paniotu is a registered representative with and securities offered through LPL Financial, member FINRA SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. The people and companies mentioned in this podcast are not affiliated with or endorsed by LPL Financial or Capitalize Your Finances.